Warren Buffett was born in Omaha, Nebraska in 1930. He developed an interest in business and investing at an early age, buying his first stock at 11 and running his own newspaper delivery business. He graduated from the University of Nebraska with a bachelor's degree in business administration and then earned a master's degree in economics from Columbia University, where he studied under Benjamin Graham, the father of value investing. He started his career as a stockbroker and then formed his own investment partnership, which eventually acquired Berkshire Hathaway, a struggling textile company. He transformed Berkshire Hathaway into a diversified conglomerate that owns and operates businesses in various sectors, such as insurance, energy, transportation, consumer goods, technology, and media. He is also known for his philanthropy, having pledged to donate 99% of his fortune to charitable causes, mainly through the Bill and Melinda Gates Foundation. Here are the 10 principles that Warren Buffett follows to get rich and stay rich. The first and most important investment you can make is in yourself. Warren Buffett believes that you should constantly improve your skills, knowledge, and abilities, as they will determine your earning power and your value in the market. He also advises that you should pursue your passion and do what you love, as this will make you more productive, creative, and happy. He once said, "The most important thing to do if you find yourself in a hole is to stop digging." This means that you should not settle for a job or a career that you don't enjoy or that doesn't challenge you, but rather seek to find your true calling and your unique contribution to the world. The second principle of wealth creation is to save more and spend less. Warren Buffett is known for his frugality and his simple lifestyle despite his immense wealth. He still lives in the same house that he bought in 1958 for $31,500 and drives a modest car. He does not spend money on unnecessary luxuries or extravagances, but rather saves and invests his money wisely. He once said, "Do not save what is left after spending, but spend what is left after saving." This means that you should pay yourself first and set aside a portion of your income for saving and investing before spending on your needs and wants. This will help you build your wealth and achieve your financial goals. The third principle of wealth creation is to learn the basics of accounting and finance. Warren Buffett believes that you should have a solid understanding of how money works and how businesses operate, as this will help you make better financial decisions and evaluate investment opportunities. He also recommends that you should read the annual reports and the financial statements of the companies you are interested in, as they will reveal their strengths, weaknesses, opportunities, and threats. He once said, "Risk comes from not knowing what you're doing." This means that you should not invest in something that you don't understand or that you can't explain in simple terms, but rather educate yourself and do your homework before putting your money at risk. The fourth principle of wealth creation is to read a lot and diversify your knowledge. Warren Buffett is an avid reader and a lifelong learner who spends several hours a day reading books, newspapers, magazines, and reports on various topics such as business, economics, history, psychology, and science. He believes that reading is the best way to acquire new information, ideas, and insights that will expand your mind and improve your decision-making. He also advises that you should not limit yourself to one field or domain, but rather explore different subjects and perspectives, as this will help you develop a broader and deeper understanding of the world and its complexities. The fifth principle of wealth creation is to find your circle of competence and stick to it. Warren Buffett defines his circle of competence as the area where he has a clear and confident understanding of the businesses and the industries he invests in, and where he has an edge over other investors. He does not venture outside his circle of competence, as he knows that he will be at a disadvantage and will expose himself to more risks and uncertainties. He once said, "It's not necessary to do extraordinary things to get extraordinary results." This means that you should not chase after the latest trends or the hottest sectors, but rather focus on the areas where you have the most expertise and the most experience, and where you can achieve consistent and superior results. The sixth principle of wealth creation is to buy quality businesses at reasonable prices. Warren Buffett looks for companies that have durable competitive advantages, such as strong brands, loyal customers, high market share, low-cost production, or innovative products or services that enable them to generate high and sustainable profits and to fend off competition. He also looks for companies that have honest and capable management, that align their interests with the shareholders, and that run the business efficiently and effectively. He then tries to buy these companies at a discount to their intrinsic value, which is the present value of their future cash flows. He once said, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." This means that you should not compromise on the quality of the business, but rather pay a fair or even a premium price for it, as long as it offers a good return on your investment. The seventh principle of wealth creation is to be patient and think long-term. Warren Buffett is a long-term investor who holds his stocks for decades and who does not care about the short-term fluctuations or the market noise. He believes that the market is often irrational and emotional, and that it can create opportunities for the patient and the rational investor. He also believes that the compounding effect of reinvesting the earnings and the dividends over time will create exponential growth and wealth. He once said, "No matter how great the talent or efforts, some things just take time. You can't produce a baby in 1 month by getting 9 women pregnant." This means that you should not expect instant results or quick profits, but rather have a long-term vision and a realistic expectation, and let your investments grow and mature over time. The eighth principle of wealth creation is to be fearful when others are greedy and greedy when others are fearful. Warren Buffett follows a contrarian approach to investing, which means that he goes against the crowd and the conventional wisdom. He buys when others are selling and sells when others are buying. He takes advantage of the market inefficiencies and the mispricing that are caused by the greed and the fear of the other investors. He once said, "Be fearful when others are greedy and greedy when others are fearful." This means that you should not follow the herd mentality or the hype, but rather use your own judgment and analysis and act independently and rationally. The ninth principle of wealth creation is to learn from your mistakes and others' successes. Warren Buffett admits that he has made many mistakes in his investing career, but he has also learned from them and avoided repeating them. He also studies the strategies and the achievements of other successful investors, such as Benjamin Graham, Philip Fisher, Charlie Munger, and Peter Lynch, and incorporates their best practices and insights into his own investment philosophy. He once said, "It's good to learn from your mistakes. It's better to learn from other people's mistakes." This means that you should not be afraid to make mistakes, but rather embrace them as opportunities to grow and improve, and also seek to learn from the experiences and the wisdom of others who have achieved what you want to achieve. The 10th and final principle of wealth creation is to give back to society and share your wealth. Warren Buffett is not only a great investor but also a great philanthropist who has pledged to donate 99% of his fortune to charitable causes, mainly through the Bill and Melinda Gates Foundation. He believes that he has a moral obligation and a social responsibility to use his wealth for the greater good of humanity and to help solve some of the world's most pressing problems such as poverty, disease, education, and climate change. He once said, "If you're in the luckiest 1% of humanity, you owe it to the rest of humanity to think about the other 99%. This means that you should not be selfish or greedy with your wealth, but rather be generous and compassionate and use your wealth to make a positive difference in the world.